It's Saturday the 21st of March 2020. Given the pretty interesting price action in a lot of the gold mining companies, I thought I'd do a bit of a blitz through the companies that I follow on the ASX, and not necessarily an in-depth, sort of just a skim of a few charts and just some of my thoughts off the top of my head. As I said, it's been a pretty interesting period. Before I do that, just a reminder that this is a free video that I'm putting up on YouTube, but the majority of the content I'm doing now is on the Patreon site that I set up a couple of months ago. I had some really good following now, more than 120 people, and I'm putting up videos there every week. Last week, for example, did this half-hour discussion of the gold miner ETFs, and I think that's very important at the moment to understand what's going on there. So I tried to go into a lot of detail on that, and also on some of the juniors, macro charts, and everything that I've sort of everything I really try and understand about the gold space. I'm trying to put it up on the site. So if you're interested in more content, you can see there I did a big lengthy video on what I'm owning and what I'm interested in. So I'm answer a lot of questions on the page and everything. So if you're interested in more content, feel free to join. I'll put the link in the video in the YouTube comments. Just a reminder though that it charges people when you sign up. It's $6 a month, by the way, and also it'll charge you the day you sign up and the day of the first month after that, the first day of the calendar month as well. So if you're thinking about signing up, maybe you can wait till the 1st of March before, if you don't want to be charged twice. But otherwise, you can, if you're happy to pay the extra, feel free to sign up whenever. So that's the Patreon page, and if you're happy with the content, feel free to join. So what I thought I'd do, I just did a little chart this morning of I was trying to get this sort of straight in my head. What the performance has really been of some of these gold stocks since the peak in the last 9 months. And since the sector really broke out, and I define that as kind of this 13th of June, a lot of the charts, that was almost the point at which the gold price broke through this sort of 1350 area, and it was just the point at which the stocks really started to take off. So I've kind of defined that as the sector breakout point. And obviously you can see that despite the fact, so I've used that point because a lot of the companies hadn't run up significantly until that point, but we're way down on almost every company since then, or we're more than half the companies are down since the sector really broke out in June last year, and every company is down since the peak in most of their peaks were probably in the August-September time frame, and a few of the others ran on later, such as Silver Lake or Perseus or Gold Road. They really ran into the sort of January-February period. But I tried to sort of get all the data. So what I'm going to do is just go through one by one all these charts quickly and sort of discuss what I thought and where the companies are positioned. Obviously the gold price, I'll talk about that in it. I'm going to put up a macro charts video on the Patreon page tomorrow as well. So I won't talk about the gold price specifically until then. Perseus has been the best performing of the companies actually in since the sector broke out, and one of the better performing year to date since the peak as well. It hasn't come off as much as some. Still down almost 40%, with the last couple of days or the last week being particularly poor, getting crushed. I think one thing about Perseus is they're not as fragile as they once were. They've got if you can see here, their cash position is incredibly strong now. They're building up. They're showing here how they're building cash if they weren't funding their third mine at Yaouré, but they're almost paying for that out of cash flow, the construction payments for that. So I think that's got about $150 million US left to construct the mine, and they're pumping out sort of $25 to $30 million of cash build every quarter at the moment. So they're not even having to draw down on a lot of their debt facilities, even though they probably will if they want to give themselves a little bit of flexibility with their cash. But I've been really pleased with the way they've developed. I did sell out of the stock on the way up. So I sort of sold most of my shares between probably about 90 cents and $1, 15, I think was the last ones I got out, just because I thought it was starting to get fully valued. It's come back on the chart. It's come back to test this long-term support resistance level, which was the basing pattern of the last 6 years. So I think it's come back nicely there. I did try and look at picking some up the other day, about 70 cents, but just missed it. Maybe it still gets back there. Probably is not getting the same tailwind as some of the Australian producers having their costs in US dollars or euros, and the Australian dollar's the thing that's getting crushed the most at the moment. So some of the companies with operations in Australia get that a bit more of a tailwind. But in general, I think they're at a pretty good price now. And this isn't financial advice, obviously, what I'm saying here, but I was looking at buying some shares myself. Next chart, we can go on to the next one now. I think Silver Lake was the other next best performer. It's come back to about this sort of long-term trend line last 3 or 4 years. Been probably a pretty strong chart. It's down only about 25% from the peak, which is better than most. Bounced up nicely the last couple of days. Seems to have some pretty good backing at the moment. They are pumping out good cash, similar to Perseus. I think maybe, I wouldn't be surprised if Silver Lake use their position of strength, their financial strength now to, they're $186 million in cash. They're pumping out sort of that $30 million in cash build every quarter as well. So I wouldn't be surprised if they look at an acquisition here. Who that might be, I'm not sure. But Silver Lake's issues is their mine lives are relatively short, so they do need to extend the mine life. They're doing that as well, but they're still only sort of relatively small mines, maybe 5-year mine life. And I think an acquisition would really help them. And they're, as I said, they're in a real position of strength relative to some in the sector who've been pummeled more. So potentially there might be an opportunity here. And they've openly said that they're interested in pursuing growth opportunities if they arise. So you can see there they've said debt-free balance sheet, flexibility, talking about organic growth opportunities, but also disciplined approach to mergers and acquisitions. So I'm wondering if they might use this as an opportunity to strike somewhere if there is an opportunity really available. So they've been a pretty good performer among the mid caps. West African Resources, really a strong announcement this week. First gold pour. It's hard to think of a better announcement. You could see. Been expecting this for. I thought they did announce that they'd be looking to do first gold pour in first week of April, the first part of the next quarter. But usually they've been pretty conservative in their targets, so I was expecting it pretty soon, and sure enough, it came out this week. Excellent announcement on every regard, really. I thought the safety performance, something that it's probably overlooked by a lot of investors, but it's a pretty important fact that you can build a mine with 3 million hours without long-term injuries, or lost time injuries. Sorry. Process plant running at already meeting nameplate capacity. I know they're only processing oxides, but still that's an extremely good result since it's only been running a couple of weeks. Just everything seems to be really running well. The underground mining, this is pretty promising. This development ore outside the mine plan showing visible gold, and I wonder how much upside there is there to the resources that are not included in the current mine plan if they find these visible gold results that they haven't been able to estimate in the resource model. How much extra that is there that can come out in production. So I thought it was an excellent announcement. The stock bounced a little on that, but it's still getting sold off hard. I think when sentiment returns to the sector, when positive sentiment returns, I expect the stock to run really, really well now. That with everything, their operational performance has been second to none and starting up the mine. So assuming that continues, I think this becomes a must-own name for kind of exposure to a growth story and a potential mid-cap miner in the next couple of years. So I think it becomes a must-own African story. And I haven't been selling any recently. I did sell some. I think I sold a little bit above 60 cents. But I've been a buyer below 40 in the last couple of months, and that's about. It did get almost to 40 cents the other day, so still a very good purchase, I think, around these levels. But again, not financial advice. So yeah, it's been a very positive few months for WAF. Next one, I'll skip over the gold prices. Obviously, that's really just there for comparison's sake. Northern Star come off pretty hard in the last 3 or 4 weeks. It was still running until early March. It was still up above that $15. I haven't been an owner of Northern Star for probably a couple of years now, back into this sort of $6 or $7 zone. I think it was getting relatively fully valued, and I've thought the move since they bought the mine in Alaska, the name's escaping me now, but since they got on board there, I've been a bit skeptical of some of the valuations, and I haven't been owning it, and it has come off hard. One thing that this week they were announced last Friday, they were announced by MVIS, MVIS, the owner of the GDXJ index, announced that Northern Star would be removed from the index. I did point that out in my video last weekend, and then so that was the big sell-off on Monday. But then the stock bounced hard on Tuesday. I think on Tuesday or Wednesday it was announced by MVIS that they weren't removing Northern Star from the index. They've delayed that decision or deferred it because I think there are a lot of problems with the ETFs at the moment. So for some reason they decided they wouldn't delete Northern Star, but if its market cap stays above sort of 12 or 13 bucks, it probably does get deleted from that index eventually. So it's not a name that I think is good value here relative to some in the sector, but you're probably seeing, some of these bigger stocks will get bought first if people want exposure to gold miners. I know some of the big names in America have held up relatively well. Evolution's probably another one that I'll talk about. That's held up fairly well. The next one on the list, Gold Road, they're back to sort of their long-term trend as well. Come off very hard in the last 4 weeks, down over 50% at one point on Monday and Tuesday. I've been buying a little bit on the way down, about $1.30, got in way too early there, and also at 83 cents the other day I bought in. So I'm relatively comfortable there. I think, while I thought in the run up I did sell most of my shares, probably between 95 cents and $1.10 I sold out. So I missed all this move up, but that was before the quarterly came out. I was very impressed with the first quarterly that came out of Gruyere the first full quarter that came out, the December quarter. I thought those results were really good cash build, debt repayment. So I think the stock, was relatively good value down here. So I've been buying it as a long-term hold, and I think they've got capacity to pay potentially somewhere 4 or 5 cent dividend a year at current gold prices. So I think that, and of course it's such a good operation, a good reserve at Gruyere. It's a truly world-class mine, it seems, versus some of the others in the sector that are not of as high quality. I think that 15 years of reserves is unmatched in the sector in Australia, really. So I'm pretty happy owning them, even though it seems low at 150,000 ounces. It's not necessarily a super good value buy here, but I think again it becomes a sort of a name that a lot of institutions will want to own with such a high quality asset at Gruyere. Next stock, Westgold Resources, has ran up pretty well in 2019 in general. I did do a video for this on the channel a few weeks ago talking about the company in depth. Their operations are pretty marginal, or relatively marginal compared to some of the other producers. They're a bit of a higher cost producer, but they're in a bit of a growth. They've completed sort of their investment phase. Big Bell is coming up to sub-level caving now, so it's not a stock that I've owned since it really was spun out of Metals X, but potentially as a play on recovery in the Australian dollar gold price. But I've always had a few question marks over management, and so I've sort of steered clear of it. And it's come off hard in the last couple of weeks, being more of a marginal producer, and there's sort of this perception that even though the gold price, and I'll talk about this in the video tomorrow on the macro charts, Australian dollar gold price hasn't really come off very much at all. It's the sort of a perception that these more marginal producers are in trouble, or and their stock's getting sold harder. So yeah, Westgold, not a stock that I'm particularly fond of, but it'll probably do reasonably well if they can get their operations back on track, which is what they've struggled operationally, I think, and been a bit more inconsistent than some of the names in the sector. Ramelius really sold off hard in the last 2 weeks, like many others, back toward this sort of resistance zone or support resistance level around that sort of 70-cent mark, which was also the breakdown in 2012, 2011, sort of the highs in here. So that was the breakout point last year, really was from that 65 to 70 cent zone. So it did come back and almost test that this week. I'm not particularly fond of what they've done with the purchase of Spectrum Metals in the last couple of weeks. I did a video on that acquisition probably 3 or 4 weeks ago on the channel, so you can check that out. But I haven't been very happy with it. I thought it was they way overpaid for that asset, and the stock's come off pretty hard. So it's not a stock that I think is particularly cheap here. I don't think they don't seem to produce as much cash flow as they should. They're all in sustaining cost figures, and their actual cash build don't necessarily correspond all that well. And I really want that cash build, and I think that's the market's sort of maybe selling them off on that. But everything's getting sold off at the moment, but they're not one that I think is particularly good value compared to some others in the sector that are producing extremely good cash flow. Evolution, as I mentioned before, they're probably, like Northern Star, they're probably held up better than a lot of the companies in the sector. Still trading, near where that breakout was. Like I said, sort of 13th of June was the date I've chosen as kind of the breakout level. They're only 10% below that, which is a pretty good result. I thought their operations have been getting sort of slightly worse over the last 6 months. They've got a few issues. They're in a bit of a heavy capital investment phase, but it's mainly when the money comes back into the sector, the bigger money, it probably flows to these big producers first. And I think that's what's holding up Evolution here. I've noticed they've probably outperformed some in the sector in the last couple of weeks. They're only really down sort of 10 or 15%, whereas many are down 25+% in the last couple of weeks. So they're holding up reasonably well, but it's not particularly cheap, and not with a lot of growth at the moment as well, but they do pump out pretty good cash flow. Saracen's been probably my pick among the sort of mid to larger cap on the ASX. They were holding up very well into February too, but have sold off pretty hard the last couple of weeks. I did try and buy some in the closing auction on Friday, just missed it. But I've sort of, my average is around that sort of $3 to $3.30. I think, I can't remember exactly, but I think it's pretty good value here, and they've been knocking it out of the park operationally for the last couple of years. And I think the Super Pit acquisition will turn out to be a pretty good purchase as well. So the market's not really thinking about any of that at the moment. It's just selling off all gold producers. But I think they're, I thought they were pretty good value when I tried to buy them the other day. Regis, I've been buying that the last couple of weeks on the way down, paying 16 cents in dividends. I thought anything under sort of 3.80 has been pretty good value. I've been probably bought it 3 or 4 times below that level in the last 2 weeks. Maybe a bit early, the first few, sort of $4 and 3.70, I think, 3.30, and I got some at 3.03 the other day. It's probably at about a kind of a pivot point here around this 3.55 level. Bounced up nicely. I wonder if the dividend has the ex-dividend date's passed, but I wonder if people are thinking maybe it's it's a good dividend play for a longer term hold. They're pretty consistent cash flow, and as I said, that Australian dollar gold price is holding up. So I think that 16 cent dividend is pretty safe. If at the current time, they're producing good cash flow, so I expect that they will pay that in the next 12 months. They'll still pay 16 cents and possibly more. I have talked about them in depth in a couple of videos on the channel as well on the Patreon page. I did a lot of videos on the quarterly reports probably 6 weeks ago, so there's a lot of detail there if you want to go and have a look at those as well. But been thinking they're pretty good value below this sort of $4 level, so I've been buying there. But they've probably come off the hardest among the mid caps. You can see there they're down almost 50% from the peak. Newcrest, haven't really done much on Newcrest for a while. I haven't owned the stock for a couple of years. Come off very hard, starting to bounce a little bit. They seem to have their own. They had an announcement where they announced a downgrade of Lihir production and some potentially bad wording about that might indicate production might be sort of a bit lower for the foreseeable future from Lihir. So I'm not that. I like some of the exploration moves, but in a company of this size, it's really about operations. But they're pretty well. They're not completely indebted as they were at one point. And I think when the big money comes, they'll go to Newcrest first because they really are the behemoth of the ASX gold stocks. But I haven't been that interested in them for a while. And they're performing like a junior here, but like all the others, like a mid cap, they're amongst the worst performers since the sector broke out and since their peak price as well. St. Barbara looks interesting here. I've been a buyer of the stock. Again, probably got in a bit early. I think the first I bought in about 240 a couple of weeks ago, and then have been buying on the way down $2, and I bought in at $1.70 as well. So I'm looking at a sort of a long-term entry here for a good decent average price. I think they're sort of past their heavy capital investment phase. I think I've got their presentation here. Even on a dividend perspective, I expect that they'll pay another 4 cents in another 6 months, and so they're trading probably on a greater than 4% yield here. They've said 1.5%, but that's really only based on the interim dividend. I expect they'll pay a 4-cent final dividend as well. The Atlantic Gold acquisition, they paid over the top for that. Was widely discussed at the time, and they had their problems at Gwalia, but I think the market's probably factored all of that in, and I think Gwalia should they talk about here all the initiatives they've done at Gwalia. As I said previously, you can go and have a look at the I did a pretty in-depth discussion of their prospects a few weeks ago on the channel as well. I was probably a little bit more bearish when it was trading at $2.50 to $3, but I think at these levels it's a good long-term buy. 400,000 ounces at decent costs. I'm trying to bring up there. You can see here they're 385 this year, but I think the guidance for Gwalia once the expansion project's finished is probably over 200 and potentially more toward 220,000 ounces. Simberi should start to come off a little bit, but they are talking about the sulfide expansion that should come up in the next few weeks. That announcement there, what their plan is. But I think next year the guidance will be over 400,000 with Gwalia coming back, and costs should start to fall. And I think they'll be pumping out very good cash flow. They'll still be a pretty good producer in terms of where they are on that curve. I think they showed that the cost curve for the 3 mines they've got, if I can find it. Yeah, so they're still Gwalia and Atlantic are still in that sort of lowest quartile. I think eventually once Gwalia's finished its capex, they'll be more toward this lowest quartile. Simberi is kind of almost becomes a growth option for them. So I think they're pretty good value here, and that's why I've been buying as kind of another long-term position. Last couple of stocks, Resolute. I've been very negative on that company for the last 6 to 12 months on this channel, and I'm still don't think it's worth going into. One thing you don't want to have in a time of a real credit crunch is a lot of debt, and they've still got a huge debt position. They did do that capital raising a couple of months ago, but that's still got quite a bit of debt. Operationally, I'm still concerned that they'll that Siam is going to be, running at the feasibility forecasts. This quarter should be probably one of their best for a while. Haven't come out with any downgrades, or so I think they probably have a decent quarter this quarter. It's still in the too hard basket for me. I've lost confidence in management, and they've been they're the worst, one of the worst performers on this chart, down more than 60% since this pump up in July when they bought Mako as well, their third mine. But yeah, there's been a real problem child for a long time. Last stock, Aurelia Metals. I might do a sort of a more in-depth one on this on the channel. I think seems to be quite a bit of interest in this stock from retail shareholders, judging by the sort of hot copper discussion. Down 60% since the peak, and down 50% since the sector broke out last year. I mean, they'd already broken down from there because the high grade that they were producing in 2018 sort of didn't continue, and their costs have increased, and they've had to do quite a bit of investment. I think the story's pretty decent here at it's a 200 million market cap for probably about next year. It should be 90 to 100,000 ounces at potentially margins pushing $1,000 an ounce or more. I think they've got 50 million in the bank as well after finishing capital investment this year. So I think the 200 million market cap, the stock is dramatically undervalued. I've been buying below 35 cents, and particularly in this but probably 26 to 23 I've been buying, so I'm pretty happy with it. I think it's probably got its own issues that it's also getting grouped with as a base metals producer, but the company came out the other day reminding people of, I think they're a 65% gold play. So the base metals is only a small part, but those base metals do dramatically reduce the all-in costs. The byproduct credits really help there. So I think this stock's very undervalued here, and they've done a lot of development work as well. And if they hit some of these real high-grade areas, they've shown that they can be have huge bursts of production in short periods, and that was what really drove this run here. So I think a lot of that those high-grade areas, I think should become available in the next few months. So that's kind of what I'm holding the stock for. Long term, I'm not holding this for $1, but I think the stock's worth north of 50 cents when the market starts to work all that out. But so that's why I'm buying it. But it's been a poor performer for the last year, but I've only been holding it sort of below 40. So that's all the companies that I really follow. There's obviously a lot of more juniors as well that I do individual videos on the channel too. So that's probably enough for now, and hope you got something out of that. And as I mentioned, if you're interested in more content, join the Patreon page. Thanks very much.